Welcome back guys to another Zero DTE video, and today Ernie's going to be talking about volatility regimes, so make sure you stay tuned. If you're interested in becoming a pro trader, check out the link in the description where you can find Ernie's education platform. Enjoy guys.
So we're not trading this cyan line. We're trading that purple line. The cyan line is a destination. That's at the end of the day. We're trading 100% that purple line, and that purple line is changing the entire day. The rate at which it changes is going to be increasing as the day moves on. And where it starts at the beginning of the day in one volatility regime versus another volatility regime. In other words, today with volatility super low, where that line is going to start at the beginning of the day is going to be very different than if we were in a time when volatility was very high. Let's say it's 27 or 30 instead of being 14. That curve is going to look very different. As a matter of fact, it's going to look almost flat. So we're dealing with something that, first of all, is changing throughout the day and also starts at a different place depending on what volatility era that we're in, or regime, I call it. But that also applies inside the day, too. There are multiple changing things. There's big picture changing things that generally change how things operate from the beginning of the day to the end of the day. And then there are those things that change intraday in a single day from beginning to end, because volatility, for the most part, is on most days highest in the early part of the day. Then at some point, it drops off as we go further and further into the session. That has an effect on how that curve is shaped. So it's starting at a certain place, and then the rate at which it is turning into or decaying is changing too. So you get the complexity. Over time, you start understanding these things and understanding where it should be starting at. On any particular day, volatility has a direct effect on the rate of change of that purple line up until a certain time of the day, usually about 12, 1 o'clock, right around there. Then it starts losing its effect. That effect of volatility is either a suppression or inflation of that purple line. During high volatility, it tends to suppress it. During low volatility, it tends to inflate it, which seems like the opposite should happen, but that's how it behaves in a butterfly. As we get to 12, 1 o'clock, the effect of volatility going up and down, that's losing its mojo, its effect, or its influence on that purple line. And then the only other influence that's left is time. Time is the final arbiter from about 1 o'clock to 4 o'clock. Wherever it is, it's going to go there at a pretty steady rate, right? So those are some very nuanced type of things that you learn over time. So what we are is we're masters of understanding the change in that purple line from morning to close. Now, it takes a long time before you start really understanding it, because there's a lot of factors involved. Like I just mentioned, there's big picture volatility, and then there's intraday volatility, both of which have an effect on it. And understanding that effect over the period of a day versus over the period of a month or a quarter all have varying effects in that rate of change of volatility of the P&L. So what does all that mean? It means that for the most part, most of you probably wonder, how do I get a handle on this? All I can say is that the easiest thing to recognize is that when volatility is low, you should generally gravitate towards narrower flies. They will give you an advantage. When volatility is high, you should gravitate towards wider flies. That's a very general statement, and it's true across all regimes and intraday. If we apply that to intraday, and let's say that when we're in a low volatility regime and my range of flies that I would normally choose are small, like between 10 and 20 or so, in the early part of the day, because volatility tends to be high, I would gravitate towards the wider end of that range of 10 to 20. I'd gravitate towards 15, 20. Later in the day, because volatility would tend to drop, I would gravitate towards the other end of that range, 10 or 15.
Thanks for watching guys, I hope you enjoyed the video, and if you did, make sure you hit that subscribe button and hit the like button below. If there's any questions that you might have for Coach Ernie, make sure you leave them in the comment section. Thanks guys.